Hey guys, I'm Rajat. So today let's talk about something very shiny and precious, gold. Yes. So have you noticed how the gold prices have been climbing recently? In this video we will discuss why gold prices are increasing, what are the factors driving this price increase, and whether you should be investing in gold right now or not. So as of Feb 2025, gold prices in India have reached a record high. The prices have increased by approximately 10% this year. Yes, this year. And is trading around 84,894 for 10 gram. So do you know, many investors and economists had forecasted that the gold will reach 85,000 by the end of 2025. But it's just early Feb right now and the gold has already reached its target. Last year in 2024, there was a 21% rise in the prices of gold. And over the last 5 years also, gold prices have been nearly doubled. Yes, almost doubled. And there are various factors contributing to the rise in the gold prices which we are seeing right now. So let's discuss all the factors one by one. So the first factor is global economic uncertainty. So whenever there is a worldwide event which is creating a tension or which is creating uncertainty in the market, people often see gold as a safer investment option. So like say for instance right now there are some ongoing tensions in the Middle East, there are some recession worries in the US, there's also some dispute with China. All of these uncertainties are contributing to investors rushing towards gold and seeing gold as a better investment option. That's the reason the demand is increasing, and that in turn is in a way is a major factor in increasing the price of the gold. Second is central banks are now increasing their gold reserves. So countries like India, they usually buy gold to strengthen their reserves. And if you overlook the gold market, you must be aware that last year, RBI had purchased substantial amount of gold in its reserves. And even in the month of January 2025, RBI has again added 15 tons of gold in its reserves. In a way, this is also increasing the demand of the gold and in turn creating a pressure on the supply. Third is inflation hedge. So with increasing prices of gold, many see gold as a way to protect their money value. And if you will see the trend of the retail inflation which is there on the screen, you can very well appreciate that people are now moving on to invest in gold to protect their money value. Factor number 4, fluctuations in the Indian rupee. So when Indian rupee weakens against the US dollar, importing of gold becomes very costly, and that in turn increases the price of gold. As you must be aware that our INR has depreciated to such a level that it is trading at around 87.59 per US dollar. Yes, that is also in a way contributing to increasing the price of the gold. Fifth factor, high demand during festivals and weddings. In India, gold is essential during festivals, weddings and whatnot. In a way, although this is not a major contributor, but this is also boosting its demand. And if you will see the trend of the weddings which has been going on in India, in January itself, gold's demand has surged by 35%, thereby increasing the price of the gold. Sixth factor, increased investment in gold. So more people are investing in gold right now through various means, be it sovereign gold bond, be it digital gold, or be it ETFs, or be it physical gold. Like in 2024, if we'll see the data, Indians invested over 1.5 lakhs crore in gold ETFs and SGB. It is so good to see that people are finally buying SGBs and trusting digital golds in India, because I have kept on telling my parents that please move on. If you want to invest in gold, please invest in digital gold. But again, they're so reluctant and they only feel that their investment is at the right place when they see a gold bar in their hand. Factor 7, supply constraint. So jewelry companies are facing higher costs due to limited supply from the bullion banks. Like for example, recently there has been a major mining disruption in South Africa. And as you must be aware, South Africa is one of the key gold supplier in India. And if they have reduced the supply, the demand and supply is not matching, in a way that is creating a pressure on the price of the gold. Factor number 8, lower interest rates. So if you must be aware that recently RBI has reduced the interest rate. So because of that, borrowing money has become cheaper and the money supply in the economy has increased, which in turn has encouraged people to use that surplus money and invest in gold. Now, these were the factors because of which there has been a surge in the gold prices. Now, let's understand how this rising gold prices affect us and the broader economy as a whole. Number 1, what is the impact on jewelry buyers? So even with higher prices, many people continue to buy gold jewelry, especially during festivals and weddings. Like say for instance, if you'll see the sales trend of Tanishq in the last 6 months, you will see a 22% increase in sales during the 2024 Diwali season. And what has been the influence on investors because of the rising prices? So now people are viewing gold as a good investment. They have started purchasing more of gold bars, gold coins, digital gold, etc. And a very interesting fact, applications like PhonePe and Paytm, they saw a 50% rise in digital gold purchases in the early 2025, mostly between 15th Jan to 31st Jan. So this increase in gold price has a major impact on economy also. So high gold imports directly impacts India's trade balance. In 2024, India imported nearly 850 tons of gold, which had widened our trade deficit by billions. So now a major question arises for investors, for people like us, that whether we should be investing our money in gold right now. Let's understand this with the help of some pros and cons. So the first pro is that gold is a great hedge against the inflation. So as the inflation is rising, gold prices may also go up. In a way, it provides you a stability in the times of economic uncertainty. You can consider it to be a hedge instrument in economic uncertainty. Second pro is that long-term trends have shown that gold prices have consistently increased over the years. So if you will see, only except 1 year, almost for all the years, the gold prices have increased steadily. Now let's look at some of the cons. So as I said that the gold prices are at all-time high right now, meaning that there could be some profit booking, some short-term price corrections right now. So you can evaluate whether gold will be right instrument in your portfolio or not. Also, as I said that if you want to invest in gold, a smart way to invest in gold is via the sovereign gold bond or the SGB. Or even you can also try gold ETFs, but the transaction cost is higher in gold ETFs. But if you will ask me personally, I prefer SGBs because SGB not only gives you the benefit of the capital increase, but it also gives you interest of 2.5% per annum. So guys, this is not a sponsored reel. I'm not promoting SGB. I'm just giving you my personal opinion. That's it. Now, having said this, many people ask me that, okay, Rajat, tell me what percentage of my portfolio should I keep in gold? Like what percentage of my total portfolio should be there in gold? So I basically explain them in a very simple manner. Like if you are a conservative investor basically means is that you don't like to take much risk. You try to avoid equity instruments as much as possible, and substantial amount of your portfolio is there in some of the fixed income instruments like fixed deposits, bonds, etc. For them, I would recommend to keep minimum 15 to 20% of their total portfolio in gold, because that will again help them to give a steady return over the years. And if you're not so conservative investor, let's say if you're a moderate investor who has around say 60% of your investment in equities, for them I would suggest to keep 10 to 15% of your investment in gold from stability and from hedging against inflation point of view. That's it. And say suppose if you are a very risky investor, you love taking risk and almost 95% of your portfolio is there in equity market like me. So for them, I would recommend to keep less than 5% of your investment in gold, because gold gives a very steady return. If you're looking for something which is above the standard deviation, then you need to take risk. You need to invest your funds in equity market. So guys, enough said. Let's conclude this video. Gold has always been a favorite instrument in India, and the recent trends show why it remains a very strong option and a very strong choice to invest in it. However, whether you should invest now in gold or you should wait completely depends upon your financial goals. So what do you think? Are you planning to buy gold after watching this video? Let me know in the comments. And if you found this video helpful, don't forget to give a thumbs up, drop a comment and share it with your friends so that they should also know why the gold prices are increasing day by day. Thank you so much. This is Rajat signing off.